In a recent interview, JD Vance discusses the significance of cryptocurrency for our financial system and the future. We will also examine the current state of quantitative easing. Money will soon be printed by the government. What impact will that have on the cryptocurrency industry and the overall economy? I would want to discuss that. We also have other news regarding XRP in Europe. Here, let's just get started. Speech on crypto was popular. Additionally, I'm aware that many intelligent people adore cryptocurrency. I'm aware that some intelligent individuals are really hesitant about it. Could you briefly explain cryptocurrency to our audience, especially to those who are worried about it and, to be honest, don't even understand it? There are many people in the world, although I am aware that many individuals own it. I am the Vice President of the United States in addition to being a Bitcoin owner. I wish to exercise caution. However, I believe that the fundamental benefit of cryptocurrencies is that they are a means of both transacting and holding value in the current digital era. Look, a century ago, you would place a dollar bill or a gold coin on the table if you wanted to go buy anything. Bitcoin's value proposition is that it can fulfill the same purpose in the digital age in a form that is safe from fraud, secure, and compatible with the current technical era. Having said that, I acknowledge that all of these activities carry some risk. New technology always carries some danger. In the Trump administration, we take the stance that people should be allowed to create and solve problems on their own. I happen to believe that the critics of Bitcoin are mistaken if they are correct. Eventually, that will be released into the market. If the proponents of Bitcoin are correct, and I happen to agree with them, they will eventually establish their case in the marketplace. The opposite of a good administration is a dictatorship. That informs specific industries that they are not permitted to carry out their necessary tasks. People must be allowed to make these choices for themselves. And that's been our strategy in a way. We desire sensible regulatory frameworks. Our goal is to enable the cryptocurrency sector to engage with the economy as a whole. From then, however, the rules of supply and demand and economics will eventually decide the matter. And keep in mind that the biggest diversion from this digital revolution is Bitcoin, since the other technology, your XRPS, your Stellars, your global chain links, is the new backbone for the entire system. They all want people to concentrate on Bitcoin. And that's where I think the greatest value will exist and be exchanged. I've been talking to you about XRP a lot in the crypto world for more than 5 years because of this. I spend 12 to 14 hours a day doing this. I've examined every aspect of the cryptocurrency market, and I think my best chance is with XRP for generational wealth throughout the coming years in a relatively brief period of time. Additionally, XRP volume has increased overall. With the exception of XRP, volume is red everywhere. As a result, institutional funds are entering XRP while people are still selling Solana, Bitcoin, and Ethereum. In less than 3 weeks, more than $1 billion has already been invested in spot XRP ETFs. What do you believe this will accomplish in 6 and 18 weeks, respectively? The supply of XRP is limited, and once it is depleted, it must be sent to the exchanges. Retail investors and, of course, a few institutional whales are the only ones who will sell after it is exhausted. Oh, you really don't have enough XRP after that. What's there? Out of the 8 billion individuals on the planet, 2 or perhaps 3 million own XRP, correct? It won't be until people genuinely understand the potential of this technology and how it will change the financial system. For some people, it will be too late. At 10, they will purchase XRP, 50, $100, correct? Right now, 1,000 XRP can be purchased for 2,000. XRP will reach $10,000. For 10,000, you can only purchase 1,000 XRP. See how that works? You can see the picture if it reaches 20,000. Okay, so this is what XRP and the European ledger are doing in the EU. Europe recently made a significant crypto move. Algorand, Stellar, and XRP have recently been formally incorporated into Europe's single digital ledger. And since Europe is finally accepting cryptocurrency, I believe that to be a really positive indicator. The financial region with the strictest regulations in the world now seeks to integrate blockchain technology directly into its settlement system. Oh, I'm so sorry. Let's examine the implications of this for cryptocurrency and the future of Europe. What then really took place? In essence, the European ledger is the unified digital asset infrastructure that is being developed and tested throughout Europe. Now it has confirmed and listed XRP, Stellar, and Algorand. Therefore, the growing popularity of cryptocurrency is essentially an attempt by the EU to modernize and future-proof the whole financial system. The idea is to tokenize financial instruments, commercial bank money, central bank money, and other digital assets on a single shared decentralized platform. So why did they choose Algorand, Stellar, and XRP? Well, each chain fulfills a legitimate, uninteresting, and unattractive function that regulators adore. The payment and settlement chain is XRP. They would therefore be a sensible choice for the EU ledger. Say what you will about the XRP army, but they have 10 years of experience, won in court, and are among the safest options for institutions to settle payments in the same wheelhouse as Stellar. Naturally, they power defunding, asset tokenization, and borderless payments. Additionally, they provide a worldwide payment mechanism for institutions. Algorand was designed with tokenization in mind as well. They are highly scalable, have cheap fees, great throughput, and are recognized as a RWA chain. Therefore, these three public chains are precisely what they would desire. Additionally, this is one of the first instances in which a significant region is publicly recognizing public chain assets within a regulated financial infrastructure, which is why I believe it is significant. And that presents XRP, Stellar, and Algorand to institutions in a manner that has never truly been seen before. When it comes to quick money transfers, international payments, and the introduction of tokenized assets into regulated markets, they will have direct access to Europe's future payment stack. And if this is successful, we can anticipate that other areas will follow suit. Additionally, we can anticipate that other areas will adopt the approach. It is evident that XRP is prepared for launch in the United Kingdom, the United States, Japan, the Middle East, and Africa. Ripple and XRP are available anywhere in the world, Singapore, even Southeast Asia. I created a comprehensive analysis and video on the European ledger. It was released 2 days ago, if you're interested. 22,000 people have viewed it. I go into all of the specifics you are interested in. You may watch the video right here, okay? And then a little bit more, of course. This XRP, XLM, Algorand European ledger post served as its model. I spent a lot of time creating this full-length film, so if you want additional details, please watch it. Okay, we recently finished the quantitative tightening, so let's figure it out now. December 1st was the last day of that. They are now going to reactivate the funds. However, what impact will that have on our portfolios? Now let's take a closer look at this. Believe that the December 1st end is historic. Nobody should be shocked that it ended because it was well telegraphed. However, I believe it's historic because in a sense it truly is, marks the start of a new era for the Fed's role in the monetary policy tools it has been able to develop since. Thus, the Fed was referred to be the lender of last resort. And I believe that we will now have to acknowledge that with the implementation of the standing repo facility during or after the era, it is effectively now the lender of continuous resort. Am I correct? It was tapped for about $14 billion yesterday, December 1st, for liquidity purposes. I mean, the Fed simply stepped in exactly like the day it ended. It was a big deal once. The Fed now simply steps in on a daily basis. Therefore, the role of monetary policy currently being carried out in this regime is essentially what Fed governors mean when they discuss the abundant reserve system as if it were the Fed's future. We wish to avoid returning to a system of scarce reserves. We're not going to have an abundant reserve system, but we do have an ample reserve system where we now think that $6 trillion is about the correct amount of balance sheet capital for the Fed to manage and truly have unlimited capital on standby upon the bank's request. This implies that you are essentially eliminating the chance that a financial catastrophe will ever occur. Price and liquidity discovery are being muted. Therefore, I believe that the conclusion of QT and the establishment of the standing repository facility constitute a completely different regime. Most investors should be concerned about this since historically, the Fed has been seen as a lender of last resort that steps in during periods of extreme market volatility. However, the structure we have inherited currently suggests that we might not actually experience that level of volatility again. For example, something will break in a different way and will need to break, which I believe is much more astronomical given the potential consequences. And in that regard, I'm not surprised that the stock market will keep rising. We're simply going to see fewer liquidity events if you truly believe that the entire idea for a while was that you required the equity market to sort of participate in price movement when you saw liquidity breaks. Does the end of QT cause Bitcoin to rise? When another acronym emerges off the Scrabble board that the Fed needs to rediscover in order to develop a new emergency and intervention program, I believe Bitcoin will rise. And I believe that the fact that everyone can now go back to the drawing board and determine what will break next is part of the reason that QT ending is a good deal. Keep in mind that Ripple XRP is connected to the repository market. Every day, they remove roughly $2 to $8 trillion from that system. They are now prepared for everything that may occur. QE, or quantitative easing, typically results in improved financial conditions, increased asset values, and increased systemic liquidity. However, it can eventually fuel bubbles, inflation, and even severe downturns. When the Federal Reserve builds up bank reserves and utilizes them to purchase significant quantities of treasuries and other securities, such as MBS, this is known as quantitative easing, QE. Policy rates have already gotten close to zero. These purchases encourage investors to switch to riskier assets in order to earn a return, lower long-term yields, and add liquidity to the banking system. Typical consequences for the U.S. economy: lower long-term rates tend to promote growth by lowering the cost of borrowing for government finance, corporate debt, and mortgages, and a short-term decrease in unemployment. Richer asset valuations and increased liquidity, however, may also lead to higher inflation, particularly in the housing and other interest rate sensitive industries. Repeated QE cycles over a period of years may cause asset price inflation, which increases inequality and the danger of capital misallocation by causing real and financial assets to rise more quickly than underlying productivity. Effects on the stock market are typical here. QE makes dividends and earnings from stocks appear comparatively more appealing by lowering bond yields. As a result, flows frequently pursue equities and raise indices. Lower discount rates and better liquidity significantly enhance stock values, partly through the wealth effect and consumer spending, according to Impractical Research on the US QE rounds. This is how QE impacts cryptocurrency. Through portfolio rebalancing channels, QE can boost demand for alternative and higher beta investments like Bitcoin and other cryptocurrency assets by increasing dollar liquidity and suppressing yields across traditional assets. Announcements and liquidity waves can have a statistically significant beneficial impact on the values of Bitcoin and Ethereum, according to studies examining the US and ECB QE shocks. This is mostly due to investor mood and the requirement for hedging diversification. Of course, XRP, Ethereum, Bitcoin, Sloan, and so forth. The connection isn't mechanical, though. In certain cases, when macro expectations or risk sentiment declined, QE or its coincided with cryptocurrency drawdowns, demonstrating that narrative positioning is just as important as raw liquidity. In my opinion, the Fed will be lowering interest rates. There will be a new Federal Reserve. Early in 2026, Jerome Powell will be replaced. When Trump installs his candidate, rates will likely decrease all the way to 1 or 2%. It should drop fairly rapidly, in my opinion. You'll have to contend with increased inflation. Thus, we are just kicking the can down the road. When this occurs, I think the markets will surge, but naturally, anything that rises will eventually fall. Because of what you're witnessing at the moment, I'm just getting ready for that. Why are they decreasing rates? Here are the employment losses that have occurred during the past few months. UPS, 48,000 Amazon, 30,000 Intel, 24 Nestle, 16 Verizon, 15 Accenture, 11,000 Ford, and the US government employ 307,000 people. Many people are hitting the unemployment line, as you can see, and these are typically higher paying occupations as well. Thus, the market appears to be a little cautious at the moment. Just exercise caution. I believe this will assist push those prices in the near future, which is why I am investing more in XRP and a few other cryptocurrency assets. Okay, Gen Z has already joined the chain. This is the rationale behind the tokenization efforts of all major financial institutions. They are aware that the younger generation is less interested in the conventional stock market and more in cryptocurrency and related communities. What then must they do? They must include all of their traditions